What's up, everybody? Bueller here again, and we're going to chart supply and demand on the coin chart on the daily. And I'm just going to use the recent levels that I see on the far left here. Oh, not recent, they're back from 2022. Oh, and these are all using the rules that we like to use here in our chat. Buyer zone, aka demand, from low to high of last red candle. Seller zone, aka supply, which this one right here, this is the one that we're going to be focused on today for the most part, just because of the positioning on the chart. This is just a perfect little use of this, so mainly using this one today, but showing you the rules of both. And these are really good to use when you use the smaller time frames. If you're going like from your days high, your previous day's high and your previous day's low, and you're doing these day to day, it's very helpful for your intraday charts as well. But today the focus is the daily time frame, just because this is one of my favorite time frames. So we're kind of focused on when you're drawing demand. Sorry for all the data there. Oh, I should probably turn that off. Whatever. We're kind of focused on the eaves and the dips. So when price goes up, you get your eve, and then you get your dip, right? And this is very helpful because you can just really focus on those eaves and dips. And that's just kind of a simple way of putting it. We'll actually look at that here in a second. And when we see those eaves and dips, be used here on the left side in the future, sometimes they're used again, whether it's to be rejected or maybe they sit on top of it as a support and they move on. This is just getting insane. But you get the gist of it. So we're going to start with that today. Sorry, that was insanely hard to look at because of how I have my trend lines now. I'm sure Leland's laughing his ass off right now. But we're going to start with the top of the high before it reversed back down to the open of the last green candle, and this helps us find a supply. And then just for a visual aid, I like to add this, the rectangle, and then randomly I throw like whatever year, just throw it ahead. Price came down, rejected, got a little midterm retest. We got another one right here. High of the last, high of the move before it fell down to the open of the last green candle. Just so we're clear on that. You kind of have another one right here. Price fell down. Very nice. Broke structure. You still have your lower low in place. That's what you want to see in your trend. To the open of the last green candle. So we're actually using the same candle on that one. Rectangle. Just going to keep putting the same year. You can see this one pretty much touched it, so we're not going to sit here and just add that level. But, I mean, if you want to add that level, you could. But I'm not trying to go super hard on that. I'm actually going to go to this one right here. You can see price rejected, pushed down before pushing and actually breaking that new low. This is where they came from. So we're going to go to that one, edit properties, and there we go. And then we can see price. Sorry, let me zoom in a little bit. Price rejected again, pushed back down. Nice little move there. Got another one down here. So technically you can kind of cheat. You can grab this one right here if you wanted to and just kind of have another area. I'm going to just because why not? The next area isn't till a little bit down here, so it's just nice to space it out too. You can see it's a little crazy on this time frame, but wait till we get to that far right, you'll be very happy. Just because it'll be a little bit more organized. So we got that one, they rejected away from it. Oh, we can see we're pretty much underpriced. We're about $70 underpriced right now. We could keep going if we want to, but that's pretty much the gist of it. And that's just to get us our information. And you can see over here on the far right, just differently how price moves with it. And what you're going to want to use while looking at this are candlestick patterns for the most part. You can see we actually have a pretty strong bearish candlestick pattern here, but they stopped right at the next area. So going into the smaller time frames, the game plan can be, well, we kind of expect continuation, but we need confirmation under the lows. So the low of previous day low, whatever that is. So in this example, it's 282.66. So we want to see continuation under that, whether it's a break, whether it's a reversal and a retest under that level, it doesn't matter. We're looking for any kind of selling pressure to continue picking up under that, because we already know that signals more selling pressure from what we've already seen. That's a very good sign. Also, cool little trick here, and you guys have definitely seen this from our streams or from Leland's breakdowns, but also, and this is very apparent, as you guys know that after a lot of selling, sometimes just some natural buying will occur. That's very possible, but where do you go and look for that retest? If you go from the high to the low, low to the high, really what you're just looking for is the fancy 50% of the previous day. And if you can get a retest under this and a lower high, you know, a lower high trend in place, real quick, let me edit this. I already forgot how. Either way, we're looking for a break of this, a rejection of this, and then a lower high of that rejection. You don't want to just grab the first red candle that touches this, but just a cool little smaller time frame trick you can use as well, because, you know, not every time do we just get continuation under previous day low. It's not always going to be that easy. Sometimes there's going to be that just natural buying pressure overnight that sends price back up a little bit before the next day's open. So that's very important to also note. And also, just because vice versa, what if they're not bearish anymore? What if they do hold previous day low? What if they do get over that 50%? Well, then there's a little bit of a higher probability that they do want to work towards whatever previous day levels we have up here or bigger time frame levels we have. So in this case, if they did get above that 50%, let me re-add that again. If they do get above this 50%, you have the golden pocket, you have this little bit of the zone here, you have yesterday's open and yesterday's high, which pretty much matches up at the top of that zone. So that's pretty cool too. You have to have two different things marked, but you have a game plan for whatever direction. That's what I like about the system a lot, and it kind of bases on like probabilities of just basic calculations. We're just using the 50% of the previous day, using some supply we drew, you know, and if you're not using this method, you're using the emerging candles, that's also fine. I'm just going over other methods you can use for charts, just using consistent rules. Because again, let's say for some reason I just want to reset, I'm just pissed off, I just want to reset my chart, I just want to chart everything again. That's awesome. I can go back to this and I can redraw it again, and it should give me this. I should get the exact same product. I shouldn't get different zones or have some different format. And another cool thing too, and Daffy has already shown this in a pretty long stream. It was like a 2.5 hour, 3 hour stream. But you could also just use recent levels. You know, let's say you don't want to go to the far left of the chart. It's just too much for you to go to the far. That's fine. You can focus on recent price action. You know, so in this instance, we'd be looking at this high. Where did they reverse from? About right here. So we'll go from that candles open, which pretty much lines up with that one. And you can see there's still a level there that lines up with that. If we go back to where we just had, you can see there's a level right there. Not counting that day's low, but there's a level there. So in either instance, price history lines up a lot of the time. So it's not always going to be perfect, but it's going to be consistent. So if you clear your chart, you want to rechart it, bam, you have it. So what I'm saying is, whatever method you end up using or get comfortable with, stick to it. Don't move away from it. Just stick to it. But I hope you guys enjoy this kind of video. If you guys want to see other tickers or other breakdowns, or maybe a breakdown of demand, how we use demand a lot more, which is pretty much just the opposite of what I spoke about today, just to the upside, then let me know. But I hope you guys enjoy. Also, please make sure you understand that when we go over these breakdowns, these are for upside and downside. We're never just sitting here going over how bearish we are on something or how bullish we are on something. We're pretty much always covering a plan for both sides or invalidations. Just because if we are wrong, we want to know when we're wrong, not when we feel like it, okay? Because we want to be more like a computer, you know, trading off conditions and parameters rather than a human with emotions and all that stuff, which of course we are. It's going to be hard to run away from that, but try our best. But I hope you guys enjoy this kind of video. Leave a like, and I'll see you on the next one.